You all. I hope you're all doing fantastic. I welcome you all back to the series of videos on liquidation. In the past, we've done three parts. Part 1 and 2 discussing statement of affairs, part 2 discussing liquidator's final statement of account. And in this video, we will be discussing the last part of liquidation, that is B list contributories. And very soon we'll be coming with a lot of other chapters of CA Intermediate Advanced Accounting and Accounting, and we'll also be doing RTP of November 2022 examination discussion. So please don't forget to stay tuned and stay updated with this YouTube channel. Come on, let's get going. And before we get going any further ahead with liquidation of companies, I have some exciting news for you all. This is the new CA Intermediate Fast Track Revision batch that's happening on Unacademy. It's going to be English batch from the team of YESHASLIVE on Unacademy. Now, in this batch, you get to learn advanced accounting from Karthik Iyer sir for audit, Ravikant sir for accounting standards, Meeta Mangal ma'am for strategic management, and I'll be doing your advanced accounting part. And we have Shandar Ahmad sir for economics, Dhananjay Bhave sir for financial management, and Murugesh Madlani sir for EIS. So, what are you waiting for? Take up your Unacademy subscription today and take the advantages of learning from India's top educators. 200 plus hours of live learning classes with recorded backup available to you all, and revision and practice tests at regular intervals, structured notes in the PDF format, unlimited recorded access, and live tests and quizzes. What more? If you take up Unacademy Iconic subscription, you also get printed hard copy of the material coming at your doorstep, and one-to-one live doubt solving sessions with live mentoring. What more can you ask for? The schedule is here. The batch has already started. My leg of classes of accounting or advanced accounting will be starting from September 4th. We'll be very eager to see you all in the class. So take up your subscription today, and the details of subscription are here, the feature wise. And don't forget to use the code YESHAS, which is YESHAS, when you take the subscription to avail 10% discount on the prices that you basically will see on the screen. Great, guys. Let's get going. Let's go forward. Let us start our discussion with liquidation of company. We've discussed about statement of affairs in the past. We've discussed about liquidators final statement of account in the past. In this video, we'll be discussing liquidators B-list contributories, meaning in the process of liquidation. A lot of times there will be some word that will come across called as B-list contributories. Now, who are these B-list contributories? And if you call these people as B-list contributories, are there anyone by name A-list contributories? The answer is yes. There are certain set of people who are called as A-list contributories, and they are the present shareholders. Let me just take you there. Give me a moment. There we go. So, A-list contributories are the present shareholders. In the event of liquidation and the company not having sufficient money to pay all its liabilities, company would go back to its shareholders to ask for the uncalled capital. When the present shareholders have to contribute to pay off such outside liabilities, those people contributing, being present shareholders, they are called as A-list contributories. And if in case the present shareholders don't have the money, company would go back to ask those people who are holding the shares before our present shareholders. And such people who are holding the shares before our present shareholders are called as B-list contributors. You might be wondering, why would the company ask money from the past shareholders? The answer is very simple. If I have the shares of a company and I get to know that the company is not in a very good state, it might run into liquidation, which might make a hole in my pocket. You know what would I do? I would be willing to give up the right on my shares. In fact, I'll try to sell. But when I realize that no one is willing to buy the shares of the company, because so is everyone smart like me, and everyone is aware of the fact that this company is going to be wound up and it will fetch no money. In fact, it's going to be a liability. I'll find someone who's very innocent, who's very poor and doesn't have any money, and transfer the shares to him by charity free of cost. If in that case I do that, on the date of liquidation, when the company comes down to ask money, they find out that innocent poor person is a shareholder and it doesn't have any money to pay to company. In that case, I'm transferring my liability to him in a very smart way. So if you think you are smart, the company is more, and the company law is even more. The company law says, if in case the present shareholders fails to contribute in the event of liquidation of the company can go back to the past shareholder and ask him the money. provided that such past shareholder has transferred the share to the present shareholder within 12 months from the date of liquidation. Meaning, from the date of liquidation, we need to count 12 months. The date of transfer should be falling between these 12 months. Only then the company can ask money from B list contributor. Now, I have transferred the shares in spite of the time I liable to pay. The answer is yes, if I have done it in the last 12 months. However, my liability is limited only to the portion of the amount of money which is not paid on that shares on the date of me transferring the share, or the share of my liability as on the date of transfer on the that day's liquidity condition of the company, which is again on approximate basis, whichever is lesser. Meaning, the liquidator has to recompute as to what would have been the liabilities, that is in excess of assets, on the date of transfer by the P-list contributor, the past shareholder. As on that date, how much ever is such excess liability, in that the proportionate share of the transfer or his unpaid share capital, whichever is lesser, is to be contributed by B-list contributor. And this contribution what the B-list contributor should make is to be made only and only if the A-list contributor fails to pay. If the present shareholder is paying, the company would not come to B-list contributor. The company would come back and ask the money from B-list contributor only and only when the A-list contributor, the present shareholder of the company, is failing to pay money. You guys get that? Just have a quick reading of this. The statement goes like, past shareholder has to contribute when the present shareholder fails to contribute, and the past shareholder will be made liable only if he has transferred a partly paid up share and transferred within 1 year before the date of winding up. And the liability of B-list contributor is limited to unpaid share of capital or proportionate share of liability as on the date of transfer, whichever is less. And a very important point that we need to note, when the question on B-list contributors comes in the examination, there will be several B-list contributors, there will be several dates of transfer. And when they give the liability on that date, we need to find the proportionate liability that will belong to each of the B-list contributor. And in this proportionate computation, the liability that will be given might be accumulated. We need to decumulate for each date of transfer and then share between the B-list contributors. Let me repeat, in the computation of B-list contributories, the kind of question that comes in our examination, we'll have several dates of transfers and we'll have several B-list contributors. When we compute that proportionate liability to each of the B-list contributors over several dates of transfer, we need to decumulate the liability. It would be cumulative. We need to decumulate and then share it to the contributors. That's the point. But before you share it to the contributors, check if he is a B-list contributor. What if he has transferred the shares well before 12 months? Or what if A-list contributor is contributing? In both the cases, he will not be liable to contribute at all. And once you find the proportionate liability, total them up based on different dates of transfer, and at the end also write the uncalled capital on such share on the date of transfer. Identify whichever is less, such is the money that will be contributed by B-list contributor. I'll now show you how the computation should work and how the format of presentation in the examination should be, and also take up a couple of examination or RTP based questions and solve it right now here to ensure that you get a very comfortable holding on. And once we're done with this liquidation, this is the last video. I would very soon come out with another topics video on this very YouTube channel. If you have any specific chapter that you want me to cover, please do mention it in the comments so that the next series of videos, 4, 5, 6, whatever it takes, I'm going to come out will be on that topic. So we'll be very eagerly waiting to see you mentioning the name of the chapters in the comment section. And on this note, come on, let's see how the presentation should be made for computation of contribution from B-list contributors. So this is a note that I just mentioned. The liability mentioned in cumulative is cumulative. Then please decumulate before you start apportioning. So the presentation goes like this. First, you need to check if he is a B-list contributor. So you write all the past shareholders and then write their dates of transfer. And then check if such date of transfer is within 12 months from the date of liquidation. If yes, then he is a B-list contributor. If no, that is like the date of transfer is not within 12 months from date of liquidation, then he is not a B-list contributor. Chalo. Let's go to the statement showing computation of contribution. We'll write the shareholders in the rows and then we'll write the other things in the column. Number of shares, we'll write each shareholders number of shares because proportionately the liability has to be divided. And then we take the decumulated liability, we share it among the contributors on the various dates. We'll total them up to find the proportionate share in liability. We'll write the unpaid portion of the share, whichever is less is to be contributed by each of the shareholder, past shareholder to be precise. You get that? Come on, let's quickly see some questions. So this is my fast track revision material which I'll be using in the upcoming CA intermediate fast track revision batch. So this has a very nice feature wherein the question numbers are serially numbered from chapter to chapter. No, from the chapter of partnership, the question numbers are serially numbered. So when you come to liquidation chapter, the question number is 59, 60. So this is how the question numbers will be so that you don't have to worry about page number. You just tell me the question number. I can tell you what chapter it belongs to and also share the solution to you. And we have compilation of all the solutions. And this particular material comprises of questions from all the past examinations, all the past RTPs, all the past MTPs. So there's nothing that's going to be untouched if in case you can solve this entire material. And if you can see, this covers theory in a very comprehensive manner and in a very beautiful pictorial manner, which will be very to say nice to learn from and something that can keep you pumped up and excited and not bore you. Yeah, very good. And you can also tell me the chapter that you feel the most boring and let me tell you how interesting can that topic be in advanced accounting. Chalo, we'll now be doing question number 59. This is question number 6E from May 2018. This had come for 5 marks and the same question was there in November 2018 RTP. Very good. Let's read this question. In a liquidation which commenced on 11th of November 2017. Note the date 11th of November because if the transfer has happened before 12th of or after 12th of November 2016 but before 11th of November 2017, then such a person who has transferred the shares will be B-list contributor. Or if someone has transferred the shares on 11th of November 2016 or before, then such a person is no more a B-list contributor and he will not be liable to pay any share in proportionate liability or his uncalled capital once the transfer is made. You get that? Yeah. Certain creditors could not receive payments out of realization of assets. Definitely, there is shortage on liquidation. That's what they mean here. And out of contributions from A-list contributors. So from the realization of assets and contribution of the present shareholders, we could not pay all the liabilities. So now we are seeking money from B-list contributors. Who are B-list contributors? The past shareholders. Very good. The following details of certain transfer which took place in 2016 and 17 are here. Shareholders are CPDBS. Very good. Number of shares transferred at the date of ceasing the member is 2500, 1500, 2700 and 300. These are the number of shares they have and this is the date of ceasing the membership. And 1st of September, that is well before 11th of November 2016. So Mr. C won't be our B-list contributor. However, P has transferred the shares on 1st of January 2017. That is within 12 months from the date of liquidation. So Mr. P is our B-list contributor. When it comes to D, is transferred the shares on 1st of April 2017. That is within 12 months from 11th of November 2017. He is also a B-list contributor. Then we have with us Mr. B who was transferred the shares on 1st of August 27. Again, that my friends is before 11th of November, after 11th of November 2016, before 11th of November 2017. He is also a B-list contributor. And same applies to S because the date of transfer is 15 September. That is like hardly 2 months before 11th of November. So Mr. C is not our B-list contributor. However, PDBS are. All the shares were of rupees 10 each, rupees 5 paid up. So 10 rupees share, 5 rupees paid up, balance 5 is not paid up. So we'll share this proportionate decumulated liability. See, the liability that they've given 5, 9, 12, 13, 500, and 14, 500 are cumulative. We'll decumulate it. So as on the transfer of C, it will be 5. As on the transfer of P, it will be 4. As on the transfer of D, it will be 3. And B, 1500 and S, 1000. So we'll subtract it from the successive amount to find out the outstanding liability. Proportionately, we'll share it between the B-list contributors other than C. Other than C will be 9000 and P will not bear anything of that 3000 which brings up to 12, because P is no more a shareholder on 1st of April. Only till 1st of January, whatever liability is there, that P will bear. So that 3000 will be shared between D, B and S, and additional 1500 bringing up to 1500 will be shared only between B and S, and the last 1000 rupees will be borne only by S. Just a moment, my laptop is running out of charge. But I have to put it on charge, if not, it's going to shut down in a moment. The battery is pretty low. It's almost about to die. Okay, guys, fantastic. So come on, let's first prepare that statement identifying B list contributor. So shareholder C, PDBS, PDBS. Okay, and the dates of transfer are 1st of September, 1st of January, 1st of April, 1st of August, and 15th of September. Yeah, I'll show the question for you for a brief moment if you guys want to take screenshot of the question. Or if you can text me, I can share this material also with you people, PDF. Or you can download it from ICI sources also. This is May 2018 exam paper. I hope you have taken the question down. I just entered the dates of transfer. Now let me take care of date of liquidation. Date of liquidation is 11th of November. And is it time from the date of transfer to date of liquidation here is greater than 12 months. Here it is less than 12, less than 12, less than 12, less than 12. So is B list contributor? No. But others are, yes, they are B list contributor. PDBS are B list contributors, and C is not a B list contributor. So that's with regard to the table. Now let's get back to computation, shall we? So number of shares, contributors are PDBS, C is not. Let's now enter the number of shares. So P holds how many shares? 1500 shares. D holds 2000. P holds 700 and S holds 300. In total, it will come down to 1500 plus 2000, 3500. 3500 plus 1000 is 4500. But however, this is not the basis for throughout. It's only for the first computation. Now, let's see. The liability as on. We'll take the first date. 1st of January 2017. Sir, why are we not doing it as on 1st of September 2016? 1st of September 2016 is not a significant date because 1st of September 2016 C transferred and C is not a B list contributor. So we'll start from 1st of January 2017 when P transferred and P is a B list contributor. Amount outstanding as on that day is 9,000. So we'll take 9,000 as total. This 9,000 will be shared between PDBS in the ratio of 15 is to 20 is to 7 is to 3. So let me do 9,000 into 15 by 45, 9,000 into 20 by 45, 9,000 into 7 by 45, and 9,000 into 3 by. If I do which, I will get 3,000, 4,000, 1,400 and 600. This is the date on which P transferred. After that is the date on which D transferred, that is 1st of April. When I go to the next date, 1st of April, the liability is no more 12,000. Here it is mentioned as 12, but this 12 already includes this 9 which is now shared. So I'll take 12 minus 9, 3,000 as my basis. 12 minus 9, 3,000 as my basis. Now this 3,000 needs to be shared not between PDBS because P is no more a shareholder. P is no more a what to say B list contributor. He's a B list contributor, but he is liable to contribute only to the extent the liability was there on the date of his transfer. So we'll share this between DBS because DBS were holding the shares as on this day. So now the ratio will no more be 15 is to 20 is to 7 is to 30. Or 7 is to 3. Yep. Now the ratio is going to be 20 is to 7 is to 3. It's only between D, B and S. So 20 by 30. 3000 into 20 by 30, 3000 into 7 by 30, 3000 into 3 by 30. In which ratio if I split, I'll get 2700 and 300. That is exactly the same amount. This is the liability of the D, B and S contributors on 1st of April 2017. After 1st of April 2017, the date of transfer is 1st of August. On this date, the liability is 13,500. However, out of this 13,500, 12,000 is already shared. What needs to be shared right now is only 1,500. And this will be shared not between PBDS or not between DBS. It will be shared between B and S only. The reason is P and D are not shareholders on 1st of August. They've transferred the shares, so they are not liable to pay, they are not liable to make any contribution for the liability outstanding on that date. So it is only between B and S. Now, let's see B and S. So B and S will share such liability on 1st of August, which is rupees 1,500 in the ratio 7 is to 3. So P and D are not shared. So I'll write 1,500 into 7 by 10, 1,500 into 3 by 10. That is 1,050 and 450. I hope you guys understood this. After the 1st of August, we have 15th of September, on which date amount outstanding is 14,500. Out of 14,500, 13,500 is already shared between all the contributors. So what we're left with is 1,000 rupees. So we will now be sharing 1,000 rupees between PBDS, no, PS transfer, DS transfer. PS also transferred. It will be completely borne by S. You don't have to apply any ratio. Now, we'll add up these amounts, identify the total proportionate share in the liability to be borne by PDBS, and later also write the amount that they are liable to pay as their share of capital, that outstanding capital, or to say unpaid capital. Whichever is less is to be contributed. You guys get that? Come on, let's do that. Now, total share in the liability. For P, it is 3,000. For D, it is 4 plus 2, 6,000. For B, it is 1,400 plus 700, 2,100 plus 1,050, that is 3,150. And for S, it is 600 plus 300 plus 450 plus 1,000. Is 1,450, 1,050 plus 1,000, that is 2,350. 1,000, 1,050, 1,450, 2,450. This is the amounts. This will now be compared with their unpaid capital. Shares were of rupees 10 each and rupees 5 was paid up. Shares were of rupees 10 each, rupees 5 was paid up. Because these are shares of rupees 10 each, 5 paid up, we will now be doing number of shares that was held by them into 5. 1,500 shares of P into 5 per share, 2,000 shares of D multiplied by 5 per share, 700 shares of B multiplied by 5 per share, and 300 shares of S multiplied by 5 per share. So here we'll get 1,000, 7,500, 10,000, 3,500 and 1,500. We are now going to find which is less among this to identify the contribution to be made. 7,500 or 3,000, whichever is less is 3,000. 6,000 or 10,000, whichever is less is 6,000. 3,150 or 3,500, whichever is less is 3,150. And in the case of S, unpaid capital 1,500 is lesser than proportionate sharing liability 2,350. So this will be the contribution made by the past shareholders of the company, that is B list contributors, for the purpose of payment towards such liabilities which could not be paid from realizations of assets and E list contributors. I hope you understood. This is question number 59. Let's however do one more question from this topic so that we'll get good hold on this. And very soon I'll be sharing an accounts progress tracker, a beautiful sheet of paper which you can use online to test your preparations on or your understanding on this topic of liquidation. Stay tuned for that and do ask me if I don't share it in the due time. Let me just clear this up, whatever the marking that we've done. There we go. We did question number 59. Let's do another question. This is question number, we've done few of these questions, LFSA and statement of affairs questions. We'll now do question number 63. Yeah, 63 is a question again from the chapter of liquidation on B list contributors. This is again examination question. This is November 2020 exam question, which was question number 3B, and this came for 5 marks. Come on, let's start solving this. In a winding up of a company, creditor remained unpaid. The following persons had transferred their holdings before winding up. Names are D, E, H, J, K. Dates of transfers are given. Number of shares and amount is given. Amount is in cumulative form. We need to decumulate it. And the shares were of rupees 100 each, 80 being called up and paid up on that day. So 20 rupees per share is not paid. 20 rupees per share is not paid. Okay. A member G who holds 200 shares died on 28th of February 2019 when the amount due to creditors was 16,000. His shares was transferred to his son X. Okay. When this shares are transferred by way of what to say because of the death or something, then you are not liable to pay any contribution towards B list contributors. So ignore that member A and G. We are not worried about that. And come on, let's see the next one. R was the trustee of the shares held by J. R paid 20 rupees per share as calls in advance immediately on becoming a member. Oh, so J is a B list contributor. Might be. He might have transferred well before the within 12 months from the date of liquidation. However, the person to whom R has transferred is J. Sorry, the person to whom J has transferred is R, and such R has paid unpaid capital of 20 per share in the due time. So J is not liable to contribute anything towards B list contributor. Why? Because the one to whom J has transferred, Mr. R, has paid the money unpaid capital. When A list contributor has paid the money, B list contributor is not liable. Okay. The liquidation of the company commenced on 1st Feb. So whoever has transferred the share between 1st Feb 2019 and 1st Feb 2020 is now caught. They are B list contributors and they would have to contribute. Except for our X, who's a son and who bought shares by transfer legally, and JR, no J, because his trustee R has paid the money duly. Very good. Come on, let's start computation. Let's now see who and all are B list contributors and who and all are not. Solution to question number 63. D, E, H, J, K are the names of the persons. The dates of transfers are given 1st January, 15th of February, 15th March, 31st March, 5th April. 15th March, 31st March, 5th April. The date of liquidation is 28th of February. No. What is the date of liquidation? 1st February. Date of liquidation is 1st of February. If the transfer is for a period, if the transfer has happened within 12 months, then they are B list contributors. So this transfer is beyond 12 months. However, the other people have transferred within 12 months. So D is not a B list contributor, whereas E, H, J, K are. Let's make it red because he's not. Let's make it green because he is. Come on, let's now show the computations. So number of shares held by EHJK are how much? 1000, 400, 700, 900 and 1000. 1000 is held by D. We'll ignore 1000. 400, 700, 900, 1000. 400, 700, 900 and 1000. So total comes to 1900 plus 700 is 2600 plus 400 3000. In total it is 3000. So let's see the liability as on 15th of February 2019. That's the second transfer. First transfer doesn't count. Why? On that day though, that guy is not a B list contributor. No, it's beyond 12 months. 15th of February, the liability is 13500. Let's take liability as 13500. And this liability of 13500 is shared between EHJK in the ratio 4 is to 7 is to 9 is to 10. So let me do 13500 into 4 by 30, 13500 into 7 by 30, 13500 into 9 by 30, and 13500 into 10 by 30. If I do which, I'll be getting 1,800, 3,150, 4,050 and 4,500. I hope you all understood this. Next date of transfer is 15th of March, on which date liability is 19,000. This 19,000 already includes 13,500 which is distributed among B list contributors. Now what we need to share is only balance 5,500. So come on, let's write that balance 5,500 and distribute it here. E is no more a B list contributor in this case. E will no more contribute because he has transferred the shares on 15th of February. After 15th of February, any liability accumulated, not his headache. So 5,500 should be shared between H, J, K. And this should be in the ratio 7 is to 9 is to 10. So let's do 5,500 into 7 by 26, 5,500 into 9 by 26, and 5,500 into 10 by 26. This would come down to be 1,481, 1,904 and 2,115 rupees only. Got it, guys? After 15th of March, next date of transfer is 31st of March. On 31st of March, liability is 22,000. Out of 22,000, 19,000 is already distributed. So what needs to be distributed now is the additional 3,000 of liability, and this liability will not be borne by E and H. Why? E and H both have transferred their shares well before 31st of March, and it's only J and K who hold the shares. So this 3,000 needs to be borne by J and K in the ratio 9 is to 10. So I'll do 3,000 into 9 by 19, 3,000 into 10 by 19, which will give me the numbers 1,421 and 1,579. I hope you all got this. Next, let's go to the last date, that is 5th of April, on which date the liability is 31,000, out of which 22,000 is already distributed. So what needs to be distributed now is 22 or 31. 22 minus 31 minus 22, that is of only 9,000. So I'll write here on 5th of April, it's 9,000. EHJ will not bear it. It should be completely borne by K exclusively, because as on 5th of April, EHJ are no more shareholders. They've transferred their shares. It's only K who holds it, so K has to bear it. Got it, guys? That's 9,000. Now let's find out the total share in the proportionate liability and then compare it with the unpaid call portion. So here it is 1,800, here it is 4,631, 7,375, 17,194, and total it's 31,000, which we don't care. Now let's take their proportionate share in unpaid capital. It is shares of rupees 100 each, rupees 80 being called up. So uncalled unpaid portion is 20 per share. How much is uncalled unpaid portion? 20 per share. So we're going to do the 20 per share into those shares. 400, 700, 900 and 1,000. So let's do 400 shares into 20 per share, 700 shares into 20 per share, 900 shares into 20 per share, and 1,000 shares into 20 per share, which is 8,000, 14,000, 18,000 and 20,000. When we do this, total is 60. Now we'll see individual में amounts as to which is less. 8,000 and 1,800, what is less is 1,800. 14,000 and 4,631, which is less is 4,631. 18,000 and 7,375, which is less is 7,375. 20,000 or 17,194, what is less is 17,194. These are the amounts which are to be contributed by B list contributories. However, J will not contribute because J's trustee R has fully paid the uncalled portion on the date of transfer. So ignore J from the table. When you do this in the exam, you have to do ignoring J. You'll say, sir, if I ignore J, will it all be fine? No, no, no. You need to take the J but not consider. Because if you don't take J, then you'll do 4 is to 7 is to 10. That would be wrong. So if you take the portion of J, only proportionate liability should be shared between E, H and K. Got it, guys? So that's with regard to B list contributories. I hope you people have understood this topic of liquidation of companies. In the same YouTube channel, I've put my marathon revision of CA Intermediate Advanced Accounting, which will be of great help for your November 2022 examination, which is a must watch before you take up your exam. I hope you'll all watch it. And any doubts, any topic suggestions, anything that you want from my end, just a message away. Message away. So please don't forget to get in touch with me. I'm CA Rajvardhan. So I hope you guys learned something new and had little fun in this session. Remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you guys are learning something new or having fun, it's all good. The day you guys either stop learning something new or stop having fun, trust me, you might start struggling because you might be in a battle. So the thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, I have just one simple question for all of you. Are we in the game? I hope the answer is yes, we are in the game. See you all in the next class. Till then, tata, bye bye, take care, and as usually, as I say, get lost.